What is up, guys? I'm a little bit early today, but that's because I have a hard stop at the top of the hour. I'm going on the DABA weekly space. So wanted to hop in here. Hopefully my microphone's working. I had some weird feedback happening. I just had a call right before this that I was on. So hopefully everything's coming through okay. Guys, I have a really good show today scheduled. We've got a lot to cover. And again, I've got a hard stop in about 55 minutes or so. But we're going to get into some of the global news, the things that are going on with Trump and Elon. Also going to get into the broader crypto news. We've been talking about the Solana ETF. There's some big news that's coming out right now that I think a lot of people are predicting. We could have a massive altcoin ETF summer. So very exciting stuff there. I'm going to bring the receipts for that. I'm also going to be talking about a big customer announcement from Hivemapper yesterday. I'm going to give you my thoughts on the Demo AMA. So I took some notes, listened in today. Obviously, I had Rob on to the space yesterday. So I'm going to tell you what my thoughts are, what the future state of Demo looks like, whether or not the project's dead or maybe it's just having a big reset. And as of now, what I plan to do with my fleet. So I'm going to be very candid about my sentiment around that. Let's see. We're also going to look at the Rover tokenomics. There was a big sale earlier today that could maybe provide a good entry point into the Rover token. So we're going to take a look at that as well, and what the tokenomics look like, because I think it's important, as always, to look at the tokenomics. Guys, I have a quote of the day that before we dig into everything else. Let's pull that up. It says, don't be intimidated by other people's opinions. Only mediocrity is sure of itself. So take risks and do what you really want to do. There are always going to be haters. There's always going to be doubters. And especially in the realm we're in with DePIN, guys, in the altcoin space, when the market's down, those people are going to be the loudest. They're going to tell you you're involved in scams, whatever it may be. Look, we're out here, we're trailblazing, and you got to take a chance on yourself. Ultimately, it's not always going to be comfortable. And there are certainly times, I left my full-time job in the corporate world over a year ago now. There are a lot of people that were close to me that were like, are you sure this is what you want to do? Are you making the right decision? And I can tell you, certainly took a leap of faith, guys, and taking a chance on myself. But it was the best decision I've probably ever made. And it's really allowed me to do what I'm passionate about and spend my time. I've said it a million times. I'm probably working more hours now than I ever did in the corporate world. And I had a pretty demanding job, but I'm doing what I like to do. And whether it's just becoming a small scale deployer, whatever it is, take a chance on yourself, guys. No one else is going to do it. And as you start to see success, you're going to see more and more haters. Unfortunately, there's a lot of keyboard warriors out there, but focus on surrounding yourself with people that are supportive in what you're looking to achieve. All right, guys. Oh, man. Make sure to like, share if you're on X. Make sure to subscribe on YouTube if you have not already. Let's get into the news. We're going to start with some fun articles, guys. Number one, and this is kind of wild. This is within the last week or so. After Pornhub left France, this VPN saw 1,000% surge in signups in 30 minutes. So it's apparently the adult site reportedly exited its second biggest market because of a new French age verification law that has a June 7th compliance deadline. So looking a little bit further into this is crazy. Look at this chart. This is the Proton VPN registrations following this new law that went into effect. By comparison, when TikTok briefly went offline in the US, they saw about 490% increase in signups. So people love their Pornhub, guys, apparently. And I went a little bit into this. The age verification laws have been enacted abroad and recently in nearly 20 US states. And it requires users, to use either facial recognition or government ID to verify their age. And there are a lot of experts that are saying, hey, this is against free speech and privacy concerns. If you're going to be looking at Pornhub, people don't want to put their personal information on there. So they're all getting VPNs. So I would not be surprised to see that in more US states. They said there's already 20 so far. Let's see, what else do we have here? Man, thought this was kind of interesting, and we'll get into some real news here. But average annual sales per restaurant, Portillo's in Chicago, 9.1 million per site. Unbelievable. If you look at In-N-Out's up there, and then it drops off pretty quickly. And I looked into this. How are they pulling this off? Well, they are quite smaller than a lot of other of these chains. There's about 80 of them, I believe. Yeah, 80 locations, 8.5 million per. They're asking, how are they doing it? Well, there's efficiencies. You don't move into a new market without team members who know the business inside and out, have a development plan for everyone. I also found out that they sold to a private equity firm about a year ago. So, some of these efficiencies, I'm sure, because they don't have that many locations. We'll see if they can keep those efficiencies as they grow, especially with that new ownership taking over. But I thought that was kind of cool. Let's see here. This is wild. This says this is actually about a week ago, but this Microsoft-backed Builder.ai went bankrupt. And here's the deal. So Microsoft invested $455 million into this Builder.ai. And they claimed they had this AI app building service called Natasha that could design and code applications autonomously and at unprecedented speed. Well, it turns out after getting valued at $1.5 billion, that they weren't using AI at all. They had 700 engineers in India that were doing all the work. Oh, man, that's wild. So after all, I'm curious how many other AI companies are actually using manual labor behind the scenes. This is something that was the case when I worked for a drone service company in Washington, D.C. We saw the same thing. We had competitors that are like, oh, yeah, we're using AI for photo recognition. They're just outsourcing. It's just cheap labor all over the world. So I'm sure we'll see more of this, but I do think there's a lot that's really being built using AI. Bob said, you reposted the stream. Bob, does my mic sound good, man? I know I had a little bit of backfeed and I wanted to restart my computer, but I didn't want to take the chance that all of my tabs for today would not come back up properly. So I decided, hey, man, I'm going to chance it. But let me know if I'm coming through loud and clear. Oh, all right. Let's get over to some Trump news. This came through at 2 o'clock in the morning, Central Time, 3 o'clock. 3 o'clock Eastern Time. And Elon said, I regret some of my posts about President Donald Trump last week. They went too far. Well. Well. President Trump said, he was asked if he could reconcile with Elon Musk. He said, I guess I could. And I thought this was kind of funny. Elon and Trump, they were making up, guys. You hang up. No, you hang up. Oh, it's so cute. So adorable. And, well, truly incredible. Tesla took a huge dive on that news when they started kind of beefing on X about a week ago now. Hard to believe it's been a week. Since then, Musk apologized and Trump said it was very nice. And, not only did they make up, but Tesla's up, guys, 22%. God. So congrats to anyone that bought that dip. Holy shit. That is wild. What else do we have going on, guys? U.S. inflation came in at 2.4% year over year. Businesses across the United States have warned for months that they would raise prices on their customers in response to the tariffs. The latest data shows that it's happening only in a limited way, helping keep a lid on inflation. It's worth noting that, yes, it was up to 2.4, slightly above April's metrics, but overall, both core inflation and CPI came in below economics expectations. That's a good thing, guys. That's a good thing. Inflation came in lower than expected. Now, I think the big question here is, are we not seeing inflation because these businesses can't add to their prices? And I think there's some of that going on with the state of most consumers' financial standing right now. I think these businesses would love to pass that all on to consumers. But I would say, God, so hold on. As I said, that my audio is not fantastic. Gosh, that's annoying. I'm going to have to figure out what's going on there. I probably just need to reset my computer. So sorry, guys. Today is going to be a little bit garbled. We'll see. But I think there's something going on here where these businesses would love to pass it on to the consumer, but they can't. I think they would see a major drop-off in revenues if they did so. But we'll have to wait and see how that plays out in the coming months for sure. And looking at trueflation, so as you guys know, CPI is what the government uses, but it tends to lag behind, particularly in things like housing costs. And they use a lot of surveys to gather that data. Well, with trueflation, they use a lot more real-time data sets, and a lot of people say it's more accurate. Well, we're sitting at about 1.94% on trueflation. It did get all the way down to 1.22% back in April. So, this is not what the government uses, but a lot of people do tend to think that this is more accurate and more real time than CPI, which again tend to lag. Well, of course, CPI came in better than expected. And here's Trump calling for 100 basis point rate cut. And he's saying the quiet part out loud now. This is something we've been talking about for months, guys. The amount of debt that needs to be rolled over. CPI just out, great numbers. Fed should lower 1 full point. Would pay. This is just this morning. Would pay much less interest on debt coming due. So important. So this is something we were all speculating on, since really February, when a lot of this trade war stuff came up, was, hey, is part of this posturing to lower inflation, to push us on the brink of recession, to force Jerome Powell's hand to lower rates because of the debt coming due. And this is a big deal. I talked about it yesterday. I don't want to talk about it ad nauseum here, but they're finally coming out and saying it, because I think a good portion of that debt is coming due in June and July. Throughout the rest of the 12 months as well. I think a total of $9 trillion over the next 12 months, but certainly something that we need to keep an eye on. We need that 10 and 30-year rate to come down, and it's not so far. There are some rumors, and I have not found any verified press to come out with this. And this guy, he tends to tweet out some things that, I'm always like responding to him like, where's your source, bro? But there are some rumors emerging that Scott Bessent could be a contender for the next Fed chair. Again, Jerome Powell's in his position until May of 2026, guys. So this is nothing that's going to happen anytime soon, unless something wild happens. But it doesn't sound like Powell is wanting to step down. Okay, so I fully expect him to be there until May of 2026. We'll have to wait and see. Next week, I believe, is the next Fed meeting. There's no rate cuts expected until probably September at the earliest, unless something massively changes in the overall economy. Let's talk about Iran a little bit, because there's some new things emerging there. For a while there, Trump seemed to be pretty optimistic about their talks with Iran. He has now signaled diminishing confidence on a podcast released today. Trump said that he's getting more and more or less confident about securing a deal. Weird way of putting it, but less confident about getting a deal done. Trump said, I don't think, when asked about whether Iran would agree to in their uranium enrichment, said, I did think so. And I'm getting more and more less confident about it. He said something happened to them, and I'm much less confident about a deal being made. And this is where things are escalating. This is why I bring this up, guys. While saying that the United States will not allow Iran to develop a nuclear weapon, Trump said it would be nicer to avoid war. Nonetheless, the Pentagon is preparing for alternate scenarios, with General Michael Kurilla, the outgoing head of U.S. Central Command, told lawmakers on Tuesday that strike plans had been submitted to the White House in the event that negotiations collapse. Okay. And on the other end, you have Iran saying that, if conflict is imposed on us, all U.S. bases are within our reach. So they're saying, hey, we're going to fire right back because we have U.S. bases across the region. So, guys, things are escalating with Iran, and also on the Iran-Israeli front. So Iran is claiming they have nuclear secrets from Israel that they've stolen, and they're going to release basically the locations and data of Israel's nuclear facilities. Now, there is certainly some skepticism about whether they actually have this info or not. They're saying the claim may be designed to warn off Israel from acting on its repeated threat to bomb Iran's nuclear sites, since Iranian insight into Israel's own nuclear program would increase the risk of effective Iranian reprisals. So I think they're saying, hey, there's a chance they have this info, but they also might just be bluffing to keep Israel from attacking them, in other words. So need to keep an eye on the Iran situation. This thing could escalate and become a problem, and markets don't like problems like that. In other news, and I brought this up yesterday, U.S. and China had 2 days worth of talks in London. So they've agreed on a plan to ease export controls, and this is what it's all been about, guys. So it's kind of weird how they put this, that American and Chinese negotiators agreed in principle to a framework on how to implement the consensus reached by the previous round of talks in Geneva last month. In other words, a lot of word salad there, but things moved in the right direction. But what's this all about? Well, guys, it's all about the rare earth minerals. Okay, this is what it's been about. They're also, now the United States is going to allow Chinese college students to attend American universities. This was a big deal. The U.S. was talking about preventing Chinese students with their visas from attending our universities. Pretty wild stuff there. But both countries agreed to ease export restrictions. And let's see here. If we go down, the rare earth minerals and magnets to the U.S. will be resolved as fundamental plan. And this is what it's been about, guys. The rare earth minerals. And this is what people need to realize. Like, we did get a deal signed with Ukraine on rare earth minerals, but it's not about the minerals so much as the refining of the rare earth minerals. China dominates, guys, when it comes to refining rare earth minerals, producing about 90% of the processed materials. And that's a big deal. Okay, we need those rare earth minerals. And I think that is why they've come to the table. And it sounds like, I believe China is reducing those, or maybe removing those restrictions altogether. That's a big deal. But again, this is why on certain supply chains, we need to be less reliant on other countries. Because God forbid, if we got into a war with them and they start holding back that or pharmaceuticals, that would be a bad deal. Okay, it'd be a really bad deal. In other news, Google is buying out employees across the company, including their search. And I highlight this because, well, for one, we're seeing the layoffs start to mount, but AI is already starting to take jobs, guys. Search engines are relatively dead. It maybe not quite yet, but it's quickly moving that way with AI agents coming, with being able to utilize AI. I showed that quote, I think 2 weeks ago, where it's like, our kids are gonna be like, holy shit, like, you used to have to go and type in and then go through like 20 different web pages and find out what you're looking for. Like, why don't you just use your AI agent? That's where things are headed, y'all. So the buyouts are a part of the company's effort to reduce headcounts, which they've been doing since 2023. Some more info on this, though. They're buying out people in their knowledge and information sector, which I thought I highlighted that. The K&I is a unit for their Google searches, ads, and commerce division. So Google's search engine, guys, it's their main bread and butter, is under threat. They're moving to AI tools. I mean, that's just what they're doing. They say buyouts are the new layoffs. Apparently, man, I lost some of my highlights here. What happened? They caught a lot of flack, basically. Let's see here. Where was it? Here it is. The pivot to buyouts comes after Google faced backlash. Let me highlight this for you guys. For laying off 6% of its workforce in January 2023. At the time, employees said their access to company systems were unexpectedly cut off. Some were long-term employees, stellar performers, or on medical or maternity leave. So essentially what they're doing is they're kind of giving them the option to go back. The other thing we're seeing is that anyone that was working remote within 50 miles of a office are being forced back to the office. We're seeing more and more of that now, where they're kind of forcing people's hands. They know a certain percentage of people are not going to go back to the office. So by forcing their hand there, they're effectively going to have people leave on their own accord. So they kind of get the same intended outcome, if you will. All right, guys. Robo taxis from Tesla are live in Austin, Texas. Check it out. They've got this cool little symbol on the side here. It's got like a cool little Tesla symbol. I don't know if you saw that. Let me go back here. So it's got that little marker there on the side. One of the things I want to call out, though, is unlike, I think this is a really base take. Let me zoom in a little bit here. Unlike other autonomous vehicle companies, Tesla had its customers pay for R&D, pay for the cars, and do the AI training. The world is about to change deeply. And we talked about this yesterday when I played those clips from Mike Horton with GeoNet, talking about how autonomous vehicles are coming. And this guy said, I've been doing a bunch of research on consumer research by interviewing customers of Waymo. They almost universally tell me they don't want to own a car anymore. They don't want to drive anymore. They don't want to take Uber anymore. And this is what things are going to be shifting to. Less vehicle ownership, guys, in more shared vehicle ownership. And, without having Uber, I think you're going to be able to drive the cost down for a lot of these services. You don't have the labor cost included anymore. And this is where things are headed. That's going to have a big impact on jobs too, because the gig economy has been propping up our job market. There's a lot of people working multiple part-time jobs, and Uber and Lyft have really plugged that gap up quite a bit. You're going to have AI in a different way here really take over that gig economy. And that's going to, guys, we're going to see a lot of job shortages in the coming years. Speaking of Tesla, by the way, and this is a big deal. I just want to drive this home. Tesla, their AI, their autonomous side of things, the data they're collecting, that's their true value. Their charging network, yes, they are they do sell vehicles, but this is why, again, Kathy Wood is so bullish on them long term, is the autonomous side of things. There's so much value there. But copper, guys, and I want to bring this up. And I'm going to share a couple of pages from a book that I read recently. And they're saying here, I love gold and I love silver, but I think the real dark horse is copper. We need to mine as much copper in the next 20 to 25 years as we mined in the last 10,000 years. Wow, that's a big statement. Well, check this out. Check this out, guy, and I completely agree. And I'm going to tell you also how I intend to invest in copper. So check it out. Check it out. All right. So it says here that Global X Copper Miners ETF, COPX, most of the big hitters are inside this. Okay, so this is a great way to get exposure to copper in this ETF. It also talks about how there's going to be massive copper shortages. So copper can be substituted with aluminum for building out electrical lines. So copper shortages could become too extreme. A good way to play aluminum is Alcoa. Okay, so those are two interesting plays for sure. By the way, the book I'm referencing here is How to Listen When Markets Speak. Fantastic read. Highly recommend it. Now, I want to talk about the demand, though, for copper as well, because where is this coming from? And this is pretty remarkable stuff. Let's see here. This is what I'm looking for, I think. Yes. Guys, check this out. And this is in that same section there. Tesla's manufacturing projections alone will require 80% of the world's copper. Okay. In China, you have to remember also, with emerging countries, they're going to be building out their electrical grids, copper. Okay. And then if there's a shortage, aluminum. But China is once again embarking on more infrastructure spending and still has only 350 million cars for its 1.4 billion citizens. Okay, this is not to mention the billions of people across the world's tropical regions who will demand access to air conditioning over the next decade. Y'all, copper, copper, copper. Okay, aluminum as a backup play if we see shortages. And let's see here. Let me go back to sharing my screen. Those unfortunately, I had to share those separately. That's why. A little clunky, but we'll be all right. Here we go. This is what we're looking at for that copper miners ETF. You can see, I mean, it's been consolidating. really in this range. It's had a nice run up. Don't get me wrong. I mean, in April, we were at 31.93. It's up to 30 something percent. Okay, since then. But this is something I'm looking to DCA into. I'm going to cover in some future episodes some other ETFs for commodities that I'm looking at. But this is one that I'm certainly keeping an eye on. And if we have any major dips, I will be buying it up. But this is a longer term play on commodities I think could really pay off and looking further out. So there's some alpha for you guys. And lastly, before we get into the crypto news, we're going to talk about the protests, guys. We talked about this yesterday. It's expanding. We had thousands of people gathering in at least 24 cities by Tuesday night. The U.S. media was reporting. San Francisco, Seattle, Houston, Dallas, San Antonio, Washington, D.C., with varying degrees of police presence. Dozens of arrests were reported in New York and San Francisco, while rallies in Houston and San Antonio remain largely peaceful. And again, I brought this up yesterday, guys. Saturday, Trump's birthday. They're expected to have massive protests around the country, some even outside of the U.S. That is the day, and I think we're going to see things certainly build up from now until then. And one thing I wanted to call out, you see a lot of people, they're talking about, the riots, the protests. Look, so there are certainly some peaceful protests. This is an example here in New York where people are just walking down peacefully. That's a protest. We had some of this in Chicago yesterday too. And then you have riots, okay, where people are like destroying police cars. And this happened in Atlanta last night. Okay, so both are happening. Both are happening. And, I leave you with this. I would expect that things are going to likely escalate in the coming days leading up to Saturday. So we'll have to see how that plays out, guys. Whew. How am I doing on time? I got 25-ish, 30 minutes. I can go a little bit over before I hop over to the DABA space. Let's talk Bitcoin. Boom, boom, boom. We've got Bitcoin is sitting at 108. Ooh, it's down a little bit over the last hour or so. Down 1,500 today. Woo! What's going on, guys? 108,000. I bet people are freaking out about that, aren't they? And here's the M2. Still, look, money supply is expanding quickly. A lot of that is central banks around the world printing. You also have banks that are lending. Guys, the M2 money supply is going parabolic, and I would expect that to continue. I talked about how China just put 1.2 trillion yuan, which is I think it was like $180 billion out in circulation. A lot of people mischaracterizing that, saying 1.2 trillion, not showing that it was the yuan. But anyway, still, countries around the world pouring money out there. And I brought this up yesterday. I wanted to add some extra context to it just to show how successful this Bitcoin ETF has been. So it's officially passed 70 billion in assets under management. It took just 341 trading days to reach this threshold. The previous record, guys, was gold. It did it so gold took 5 times longer to reach that same threshold. So we are seeing like unprecedented adoption with these Bitcoin ETFs. Pretty wild. Bitcoin is arguably too big to fail now. I agree, but I do agree with you guys. And this is something where, if we see any massive drop-offs, I'm going to look at it as a major buying opportunity. But a lot more people coming out like, hey, Michael Saylor, the MicroStrategy is going to fail. A lot of that coming out right now. If that did happen, it would certainly crash the price. The other thing is quantum computing. They're talking about they need to upgrade the network. Okay, if that happens before they upgrade the network, that's a problem. That's a problem. I put out a TikTok about that, and I don't do many TikToks, but put one out like maybe over a year ago, about how that could be a threat. But guys, these dips along the way, I'm looking at them as buying opportunities myself. All right. Let's talk about Bitcoin dominance. So if we look out like at the year to date, it's up 10%. 1 year, it's up 15%. Alts just have not done much. In the last week, we've seen a little bit of alts gaining traction. Keep in mind, Bitcoin price has been going up too. So that would mean that we're seeing an increase in the altcoin market cap, which is indeed the case. We look at, this is the daily chart. We're certainly moving back up. We saw, things really hit low back in April. What is this here? Oh, this is back following that August Japan carry trade unwinding. Then we saw a big move up after the election, peaking sometime in December, and then coming back down after the trade wars and all of that. Now, if we go to, let's go to the 4-hour chart. Expand this out a little bit. You're seeing that I think we are starting to see the trend reverse here, guys. So we saw it coming down. We're seeing the trend move in the right direction. It should not be a shock to anyone that we're seeing these types of days now on the crypto bubbles. So on the daily, a lot of green. On the weekly, even more green. Look at virtual up 23.5%. Altcoin, ridiculous, up 35%. Still down on the month, but things are trending in the right direction. That brings me to arguably the biggest news of the day. That is that the Solana ETF could be approved. Well, this report's saying in the next few months, but I have some reports that say it could be sooner. And this is going to be a massive catalyst, and one that maybe the catalyst we've been waiting for, guys. Think about this for a second. If the Solana ETFs get passed, there's a lot of Solana bag holders that will see their bags pumped. I would imagine we would see them take some profits and that flow into altcoins. So big deal here. So it looks like the SEC has asked the prospective Solana ETF issuers to submit amended S1 forms within the next week. So they're saying in this report that it could be within the next few months. Now, if we look at the updated likelihood of being passed in 2025, up to 90%. It was at 70%. So this just got upgraded 90% for a Solana ETF. And in this article here, they're saying altcoin ETF summer may come in July. ETF analysts say the Securities and Exchange Commission could approve Solana, Ether staking, and crypto index ETFs as soon as next month. So they could start to approve some cryptotide exchange fund traded funds as soon as next month, kicking off an altcoin ETF summer, analysts say. The note added the SEC could also act early on Solana. So that is huge news, something to keep an eye on, and I think that could spur a massive run in the altcoin side of things, which is obviously what we've been waiting for. But also this guy that showed, hey, look, this has been a multi-year trend line that we've been sitting on with altcoins. Is the breakout coming? I mean, this goes all the way back to 2018. So this is a crazy support line here. We are sitting on it. That's good news. So could this thing really move up? I think it could. So that's very exciting there. BlackRock continues to buy Ethereum. I talked about this yesterday. I think Ethereum could go on a massive run. I showed some other reasons why, but there's a lot of money flowing into Ethereum, guys. So don't be sleeping on that. In some not so great news, and then we're going to get into some DePIN stuff, guys. The Connecticut passed HB 7082, banning the state from accepting, holding, or investing in Bitcoin or any virtual currency. I think we're going to see some of this, and a lot of that is likely because it's been so politicized. You're going to see a lot of blue states now that are like, no, we're not going to do Bitcoin because it's Trump. And you know what? It is volatile still, but I think these states later will end up buying Bitcoin. And as Michael Saylor says, you get Bitcoin for the price you deserve. Okay. So Connecticut, bummer for you guys. Missed opportunity. You'll be back. The other thing, this guy's calling out Michael Saylor. Apparently, their director dumped 70% of his MicroStrategy shares to the tune of almost $10 million. So, interesting timing there. But I remain bullish on the markets. There's a guy. Let me see. Did I pull it up here? No. Let me pull this up. I highly recommend watching this video. Here we go. Where is it at? This guy that called. Oh, man. Oh, here it is. This guy called the shorting of the market after the Trump inauguration. He made like tens of millions of dollars shorting the market. Follow him. Anytime you have someone that is against the grain and right, he was one of the very, very few people that called the top of the market. This guy is ultra long right now. He sees Ethereum going to $4,000. And he's been spot on, man. So highly recommend following this guy. Watch this video. It's worth watching. And again, someone that called the shorted the shit out of the market, made a ton of money, is ultra long. Love to see that. And then I thought this was funny. Before we get into the DePIN stuff, Andrew Tate showed his hyper liquid trade that was 138% profitable. However, they were able to track his wallet and find that he was actually $600,000 in the red. Ha! I think Andrew Tate's kind of a schmuck, but you know, everyone's entitled to their own opinion. And let's get into the DePIN news. How's everybody doing today? Like, repost. Make sure to also follow me on YouTube. Subscribe, guys. Subscribe. All right. Dude, we're doing good on time. Hell yeah. Been going a little bit faster than normal today, guys, but it's okay. We're getting through all the important stuff, important news of the day. By the way, I'm curious, what do you guys think of the new flow? I was going backwards. I was kind of going with DePIN and then funneling out. Appreciate you, man. Appreciate it. Love all the support, guys. I think it's better. You know, William was one of the people that was like, hey, man, you should start with the broader news and funnel downward and get into, you know, the DePIN side on the back end. I think it flows better because the global news and all that impacts markets. And then you kind of whittle down to the macro, and then you whittle down to the crypto, and then you whittle down to the DePIN because it's all interconnected. I think it flows better that way, but I'm curious what you guys think. All right. Hivemapper. Woo. Flow is good now. Appreciate that, man. I think it flows way better too. Justin's one of my OGs. He's good people. Hivemapper landed a Fortune 50 customer today. Woo! We don't know who it is yet, but that's big news, guys. And they just announced Lyft. They have 4 of the top 10 mapping companies buying data from them. So I think when the market rebounds, Hivemapper is one of those DePIN projects that's A, very easy to understand, and B, has a lot of big customer announcements. Not another 22 Hivemapper with a puking emoji. Yes, there are a lot of people that are not super happy with Hivemapper right now. I mean, we can talk about some shortfalls from them for one, because you know what? We need to be objective, guys. Token emissions were huge, right? There's a lot of token circulation now, so it's gonna be hard to see crazy. Oh, he said it's Uber. Is Uber a Fortune 50? That would be pretty big if they got Lyft and Uber. It'd be big news. We'll see if you're correct on that. That's interesting. So the token emissions were massive, you know, so it's going to be hard to reach new all-time highs in the token price unless we see a massive market cap. Not to say it's impossible, but that's certainly a problem. Number 2 is that they don't have the ability to lock the Bs yet. They don't have a good token split for the B yet. So, you know, there are definitely some shortfalls, but I think all that said, we are, you know, Hivemapper's poised to have a major bounce back with some of the customer announcements they've had with them moving to the B. I think overall it's been a lot more positive than negative recently. And they had a rough go for a while there, man. People were losing faith. People were getting really frustrated. They're still not out of the woods, but I think they're moving in the right direction. He said 51. Fortune 51. Watch it be Uber numbers like, you're a liar. You said it's a Fortune 50 company. Oh, man, you know it's coming, guys. All right. Weather XM. Guys, I was supposed to have a call with them this morning. Can't really speak to the details too much, but they pushed it out. They've got some big developments coming, and they wanted to push it out a week or week and a half because there's a lot more to cover. Can't speak to all the details. They gave me pretty vague details about some of the stuff they're working on, but all good things. I'll say that much. So unfortunately, my call got pushed out a bit with them, but we will have some exciting news to share about WeatherXM. And guys, anytime a project's hiring, that's a good thing. Okay, they've got a senior growth marketer job, and they've also got a business development manager. So if you're in the sales side, maybe take a look at this. But 2 job postings, that's what you want to see. You want to see them hiring up, not in a wasteful way, but in, you know, if it's adding value to the project, and it seems like they are hiring for 2 positions they really do need. All right, let's talk about Rover. I have a major problem with Hivemapper just deciding one day they don't want to burn tokens with revenue. I believe they still have a token burn mechanism in place. They would have to change that. I think Ariel did come out and say, hey, token burns are a bad idea early stages of the project. This is something that we're seeing more and more people talk about now. And I have a problem with that. You know, they're looking at like the Web 2 model. They're like, hey, you know, when you have a startup, I'll put this down and speak to this. You know, their argument is that in the Web 2 space, when you have a startup, you push all the revenue back into, you know, high growth in the beginning stages. And that'd be like a startup having a stock buyback. You don't see that in there. Like the investors would say that's the worst idea possible. I think this is different. We need to wrap our heads around the fact that DePIN is different. These, you know, tokens are, instead of, you know, pushing US dollars out, they're basically creating tokens out of thin air to bootstrap the project. And then you have this perceived value. I think the revenue has to be tied to the token early on. And I think that we need to kind of wrap our heads around the fact that this is a different business model altogether. Okay, so things aren't going to be like they have been in the Web 2 space. I think we still have to see this play out and make sure that it's going to work. But I think we're seeing, like with GeoNet, things are moving in the right direction. They have a heavy token burn, and so does Rover. We're going to talk about the tokenomics here in a minute. Journey into Rover pioneering controllable data generation for robotics and AI. They're using LiDAR. So they put this report out. It's worth reading. They have 45 activated units. Of course, that's the light cone. That's the high-end version. They're creating 3D data. Okay, so different than what everyone else is doing. Hivemapper is just doing 2D visual data. Rover is creating 3D HD maps. Here's what that thing looks like. I'm also going to show you a video that Helium Deploy put out setting one up. They go into users can precisely define the target environment. So they're looking at urban areas, highways. They mentioned in an interview that the highways are a high value area to map in the early stages. And they're using LiDAR. So LiDAR is like this laser system. You can see kind of how that works here, where it's detecting all these objects. So hell yeah, man. Rover and GeoNet. Talked about it yesterday. Anything that Mike Gordon touches, I want to invest in. I'm going to say that much. He's proven himself to me. This is the video I'm talking about. Go to Helium Deploy. I do have a referral link on there I should share, by the way, but I'll put that in the video description. I'll bring it up tomorrow. I don't have it handy at the moment, but this is what this thing looks like. So, you know, number one, this is a pretty big unit. So before you go in and order one, I would make sure you're okay with having this thing on your roof. But I do believe that these things could pay out pretty well, guys. Speaking of that, Litecoin second batch wait list is open, so you can go ahead and register for that. And looking at the Rover token. Okay, and we're going to talk about some tokenomics here. I'm going to talk about my thoughts on Demo. There's a big sell-off today, got eaten up pretty quickly. You see this market cap. This is not accurate, guys. This is based on fully diluted valuation as if all tokens were in circulation. That's not the case. So hop over here to CoinGecko, which tends to be more accurate in a lot of cases on circulating supply. They're saying that, you know, only 105 million of the 10 billion tokens are in circulation, which should be right. Right now, I'll show you the tokenomics documentation, but it really should only be people mapping that are getting supply unlocked at this point. So we're sitting at $1 million market cap right now. It's important to know, you know, to take a look at what type of emissions we're going to see over the next year, though, and that's what I want to kind of break down a little bit in this video, because we can then determine, hey, is this a good price to get into Rover or not? What type of market cap are we looking at over the next year here? So 10 billion total fixed supply, 51% going to people mapping. The team's getting 20%, investors 20%, ecosystem 9%. So let's look at this token unlock schedule looks like. The mining rewards are going to go out over time. I see Rover. I give a like. Yeah, cool. Like, hey, share too. Oh, you guys are on YouTube. If you're on X, go on my account there too and retweet if you would and share. And thanks for the like. Appreciate it. Make sure to subscribe too. All right. So if you look at the team allocation, 9-month cliff, followed by a 36-month linear vesting. So we can expect in a year from now, let's say that they have 7%. Okay. Then you have on the investors, you have unlocked at 0.733% unlocked at TGE. Then you have a 6-month lock period and then vesting over 24 months. So let's call it 8%. Okay. So between that 15% over the next year, 1.5 billion tokens. Ecosystem, this is going to be over 12 months. So you can expect that to be fully out there. So let's just, for the sake of math, call it 25% of tokens between these three will be in circulation, rough math, okay, in the next 12 months, plus some mining rewards. So let's knock that up to say 35%, okay, 30 to 35%, somewhere in that range. So let's say 3 billion tokens. 3 billion tokens on the total supply. And let's look at the math right now. What would that put us at as far as market cap goes? This is generally how I look at these things. So that's only a $27 million market cap at current prices. Is that right? That is low, guys. Am I right on the math there? Yeah. Okay. So to me, not financial advice, guys, but you look at the, taking the token emissions into a consideration here, we would be at, not $1 million market cap, but at current prices, about $30 million market cap. That to me seems really low. And these are some price points I am looking to get a position. Okay. Not to say it can't go lower, but I do like where we're at on the price action right now. Okay. Not financial advice. Again, I have to remind you guys of that. Because everyone has their own risk tolerance. 27 mil. Yep. 27 million. That is my math, how my math's checking out too. Coolio. Ado. They officially launched 375 AI Mysterium in their platform. This is one to check out, guys. I'm talking to their team right now. I think 375 AI is going to be an amazing project. If you haven't watched my interview with their founder, Harry, check that out. But basically, you can go onto their app store with your desktop setup guide, and based on what type of compute you have to monetize, they'll connect you with the project that is going to help basically give you the best payout for your compute capacity. That's pretty cool. And they're onboarding a bunch of new projects. They're going to help you manage that, help you connect with those projects. So kind of take some of that research out of play for you, make it easier for you to contribute. I like it. One other thing before I talk about demo, and then I got to hop off, guys, because I got to hop on that space. Carrier One, they haven't had their TGE yet, but I met with a team that's basically partnered with a lot of these different projects, these Wi-Fi offload projects. And they said that Carrier One, out of all of them, if you look at Exnet, if you look at Helium and Carrier One, they're like, hey, Carrier One is the one whose tokenomics are sustainable, that can really crush it, that are being massively overlooked. So this is one that I'm certainly going to be looking at pretty closely, especially as we approach TGE. I'm going to do some more research on Carrier One, but this is one, Carrier One is one to take a look at, guys, for sure. My fleet manager made us 1,000 euros for the last week with 2 LCs. Damn. All right. Guys, that LC wait list is open. Take a look. Take a look, ski. All right. Let's talk about demo. And then I got to hop off. I'm going to try to keep this to 5 minutes. So I gotta run, guys. I took some notes on the AMA this morning. So number one, I think the big takeaway was that Rob said, I'm not focused on the total number of users, but the users that are actively using the protocol. That's fair. Okay. So just to get out ahead of it, is demo dead? I don't think so. And I'm going to talk about why. Is demo dead for large scale deployers like me? I would say yes. Okay. And it sucks to say, and maybe I'll change my mind here. I think the problem has been that a lot of people that connect to their vehicles were just doing it to mine the token and not really to utilize the application itself. That's bad. That's really bad for the project. Okay. If we look at, and talked about this a little bit yesterday, but you look at 181,846 vehicles connected to the network. The big problem here, though, is that, well, they only generate, these vehicles only generate revenue to the project if they connect to applications, and they have to opt into those applications. So when you look at how many vehicles are, opted in to these different protocols, you have, 38,000 of them connected to one app, about roughly 10,000 connected to two applications. And then as you get out to 3 and 4, very, very few vehicles. So the vast majority of these, I'd say roughly 70%, are not connecting to additional applications, are not generating revenue for the project. And in fact, they're hurting the project. Now, I would argue that in the early stages, it helped the project because it helped attract developers into the ecosystem to build. Okay, so that was a win for the project to get things going. But now they're having to pay for the connection for all these vehicles, and it's draining their cash flows and generating zero revenue. They're literally a vampire to the ecosystem if you're not using it. So that's the problem, guys. And that is where, Rob's point comes into play, and I get it. Because from one end, yes, great, we have developers building applications, but if this number doesn't go up, they don't see vehicles connecting and generating revenue, they are actually a net negative for the project. So here are my thoughts. Let me pull up. Let me make sure I touch on all the things that they talked about. Number one, they're making it very clear that the R1, the new hardware, and the Teslas that get really good data are their main focus moving forward. Because they get the best data, which means they have the most capabilities to leverage that data and you have useful applications. That's one. They need to get more partnerships like the Kaufman. That's the car. I guess they have car dealerships across Latin America. Those are going to be able to drive the right type of participants. People that are going to pay for the service, that are going to use the application to see the value. That's what they need. They're also talking about getting it on Amazon. So to me, we're going to have a major reset with this project. I think we're going to see a pretty big drop off, and I'm going to touch on what I think that drop off could look like and what the outcome will be from that. But they're going to start now having kind of a reset with people that are joining the network, knowing that they're going to have to pay $9 a month for their subscription, and they're getting the device not because of the tokens, but because of the applications that they're building in the ecosystem. That's what they're looking for. One of the other things they mentioned, there were people that were connecting via hardware and software. They're going to put a stop to that, because it doesn't help the project. And then vehicle connections for smart vehicles outside of Teslas don't give great information. They don't give great data. So they're likely going to discontinue that as well, because it's just not it's not good for the project, and it's not good for the user that's connecting their vehicle. There's just not enough value there for them. So what does that look like as far as vehicle drop-offs? Well, number one, the AutoPi users, I think the OG ones are going to be the ones that come up first in August. And you can see here, by the way, where is it? You can see which kind of vehicles are connected. So you see Tesla is about 36,000. I would expect those will stay connected for the foreseeable future. Some of these other ones like BMW, Toyota, they're probably using smart connections. I don't think we're going to see a massive drop off with the AutoPis, because I'm thinking back 2 years ago when I started connecting my AutoPis, and the ones that are out of their connected service that will come up for payment in August, I think there are only like 30,000 vehicles connected at that point to the network in total. And I would bet only 6,000 of that was probably hardware connections. So I don't think we're going to see this massive drop off right away come August. But I do think that as people start to get, face that decision of whether or not to keep, pay for their connection, I think over time we will see more and more vehicles disconnect. The question I have, and we'll have to wait and see how this plays out, is, are they going to add enough value as far as the applications over the next 3 to 6 months. I think that's going to be very telling. Do market conditions improve a lot? Okay. Because if all of a sudden we see an alt season and we see demo price, the price per token go from 6 cents up to 20, 30 cents again, well, people are now going to be like, well, maybe I will pay that $9 a month to get the tokens. Okay. That's another thing that could come into play. And the third thing is, can they bring on enough of these partnerships through Amazon, through Kaufman, for example, that they can replace the drop off with the right types of participants to where devs will still want to come in and build applications. And that is the big question to me is, are they going to turn away devs and turn off devs because they see the ecosystem dropping so quickly? Or will they still be able to attract people to come and build in the ecosystem? That is, to me, that is what we need to keep an eye on. Now, as far as what I'm planning on doing, guys, I'll be honest. Come August, unless they have some type of a pretty sizable discount, I'm not really looking at spending $2,000 a month to keep my fleet connected. And I don't think that they are looking for us as, the main contributors at this point. I think for me anyway, it would have to be changing over to R1 probably for most of my fleet, because that's what they're looking to do anyway, and kind of sunset my autopies most likely. But I don't think that, again, I think they're looking more towards someone that owns 1 or 4 vehicles in their family, maybe of a business that you want to get connected. I don't think they're looking for DePIN mass scale fleet builders. And I just, it sucks, but I get it, because we're not driving the type of participation. I guarantee the people in my fleet, no matter what I say, they are not using the ecosystem for their intended purpose. It's just been mining tokens. That doesn't help the project grow. So while I think it is dying for the large scale deployers like myself, like Suburban, I think the reset could actually work. When you consider that they're adding a lot of new vehicles, but now they're adding the right types of vehicles that are going to use the applications. If they continue to add valuable applications in the ecosystem, and I think you could see a lot of revenue generated, I think they could turn things around. And that is why with everything so oversold right now, I'm still holding my tokens. I just, at least right now, and I could change my mind, and I'll keep you guys updated, I don't see myself taking on a $2,000 a month expense to keep my fleet connected of pretty much all autopies. I'm not planning on doing it. So if that changes, I'll let you know. But I still am optimistic about where this thing could go, but I think we could see some headwinds as this transition takes place. But from a business perspective, I get it. I really do. Anyway, guys, that's what I got. I got to hop off. I got to hop on this. William's going to kill me. I'm already late. But as always, I appreciate you guys. Make sure to share, like, subscribe. Cheers, y'all.